let's talk about how Tesla stock is getting absolutely murked right now. The TLDR is they just reported their earnings. They were not so bueno. And then on the earnings call, things got even worse. That's why the stock is, at least at the point that I'm filming this, down over 9%. There's a couple interesting reactions to this. Some people on Wall Street have this type of an opinion. This is from Dan Ives, a very respected analyst who's been tracking the tech sector forever. We were dead wrong expecting Musk and the team to step up like adults in the room and give a strategic and financial overview of the ongoing price cuts, margin structure, and fluctuating demand. Instead, in all caps, we got a high-level view and another train wreck conference call from the street. Price target 315. Obviously not happy. If I believe Tesla, if you look at the last 8 earnings call, not I believe, I know this is factually accurate, they've actually missed on 6. So in terms of odds, it's not so good. If you look at the last 4 now, the last 4 earnings, they've all been gap downs at the next market open relative to the close. So the earnings trend has not been so good. Overall, I just want to be clear, like I'm still bullish in the long term on the stock, but some of these conference calls, they like very, very much anger Wall Street. So that's more of the bearish side, and I understand why that's happening. A lot of people, I suppose, want like a bit more of just like confidence in where their money's being invested. But another part of FinTwit is actually reacting the way that I guess Elon himself years ago said people should be reacting. Give this a listen.
If you see people panicking, then instead of saying, oh man, my stock's gone down, there's a buying opportunity.
I think this personally will lead into being a buying opportunity. I would more than happily buy the dip on this. I just want to make sure it's the appropriate dip. I'm not just going to arbitrarily try to catch a falling knife right now. But before we get into the exact details of the earnings, I want to hear from all of you. Are you gonna buy the dip? Or are you like, more pain's coming? I'm very curious where the full audience is at, so let me know. But anyway, to get into the actual what happened for more of a quantitative standpoint, Tesla shares dropped 8% after company warns of slowdown in 2024. Now, to give you a bit more information there, the earnings per share came in at 71 cents. The expectation was 73. The free cash flow came in at 2.06 billion. The expectation was 1.45 billion. The gross margin came in at 17.6%. The expectation was 18.1. We're actually seeing the gross margin continue to drop and drop and drop, and that's most likely because of the price cut. As we've seen a ton of price cuts for Tesla. Obviously, that's going to be eating into the margins. They did not give a production guidance for the upcoming year. And you could say the overall vibe of it was that it seems to be like the company's in between 2 waves of demand. It's like in that awkward lull in the middle right now. And another thing that you could safely take away from this entire call is the fact that clearly, Tesla is a company that is highly impacted by interest rates. As inflation goes up, as the Fed is fighting inflation, as the Fed fund rate continues higher and higher and higher, we are seeing Tesla get destroyed by it. So it would arguably be safe to say, like logically, if we're like, well, okay, if as the interest rates are going up, if that's painful for Tesla, when they start coming undone, especially if it hits another technical stride in just like what it's offering to the public, that could be very, very good for the stock. So just wanted to kind of share that, but nonetheless, just obviously Wall Street, the analysts, I'm not talking about the retail generic support of Elon, but I'm talking about actual Wall Street. You can see how many price cuts there are. It's down right now. And right now, what do we have? KGI, I mean, from 309 to 213, 255 to 220, 250 to 225, 300 to 297, 310 to 270, 229 to 225, 223 to 200, 255 to 224. So pretty much every major analyst who people pay attention to, and please take that with a grain of salt. Like they're as wrong as they are right. Like I just want to throw that out there. Their odds are about 50-50. But my point is you see the general sentiment of every analyst cut their price target. Musk fails to convince Tesla investors to overlook slowdown. So on one side of it, you have just what's going on with the vehicles, the production, what's going on with the gigafactories, what's going on with next gen, all that stuff. That's like just pure business. On the other side, we had a bit of a social issue with Elon. Remember recently how it came out, he owns 13% of the company, and he was basically saying, hey, if we're going down this path of AI and AI development, I want more. I want 25%. And all of media seemed to attack him. They're like, whoa, you're so greedy. Why would you want more? And he clarified on the call. He's like, actually, I don't really care about the financial side. I want dual class voting. He wants more voting power. So not necessarily more financial investment in the company. It's not like he's saying, hey, double how much equity I have. He, if anything, would be more happy with doubling the voting power of his current shares. So that was discussed a little bit. And I think that type of narrative like kind of calmed down because Wall Street really came at him for it. So that's one thing. Obviously, other things, it's just Elon Musk. Every single day he's in the news. A lot of people questioning of like, how much time does he have? Is he dedicating too much time to Twitter, aka X, that type of stuff? But if you've listened to any of these calls, it just seems like they're so much more negative and awkward than like you would ever want them to be. It's strange. But anyway, this is a clip from Bloomberg.
No delivery forecast, but let's start off with something that Ross Gerber was telling us here on the program earlier in the session here, that he was really looking closely at those gross margin numbers, 17.6%. And when you adjust here for those regulatory credits, 17.2%.
Remember, the expectation was 18.1.
And it's important because
so
automotive gross margin, X those credits, slightly above what were muted expectations. Tesla still has industry-leading margins for making electric vehicles. You know, if you strip out ZEV and you strip out the benefit of software, they still kind of lead in this space. But in the final 3 months of 2023, discounting, price cuts, using that lever in both directions was a factor, along with, despite it being a record quarter in terms of sales, an impact on the bottom line, which they've kind of stayed the course on.
I think it's interesting, too, when we talk about the gross margins holding up. Also, the free cash flow number came in well above estimates, more than $2 billion. I think the street was only looking for 1.5 here. Is that kind of a one-off here, or is there a trend line that we should be paying attention to?
Well, they're being efficient at a time where they're trying to ramp up production of Cybertruck, which is a new model. You have to spend to bring new product online because of the time it takes to staff up and tool up new assembly lines and the investments that are needed for that, at the same time as their profits taking a hit from the macro environment that we're in. But also,
actually currently trading
this
$10
is the kind of
less
first
than
real
that.
financial we've had since Zach Kirkhorn left as CFO. And Zach was a very good manager of the bottom line and very good manager of Tesla's cash position. His departure doesn't seem to have impacted that trend.
I want to go to something that Tesla said, which makes it really difficult to understand what's going on, which is that volume growth will slow notably. That's pretty vague, and we know that for 2023, they delivered a record.
What she's referring to here is they gave no production guidance for 2024. They just said they expect it to slow down, but they didn't really give an indication of like the magnitude of the slowdown. So the fact that they're not really ascribing a certain like quantitative measure to it, I think is freaking out some investors, especially in the short term. They're like, what do you mean slowdown? Like, why are you not telling us your expectation of how much of a slowdown? That's what she's referring to.
1.8 million vehicles, and a lot of analysts were anticipating something in the neighborhood of 2.2 million vehicles for this year. What does it mean when Tesla has talked so much about a 50% annual growth rate in deliveries?
What's critically important to state is that 50% CAGR, which goes back to early 2021, starting from the end of the 2020 financial year, related to production. So what they're saying on a compound average annual growth basis is that they would increase their production capacity and the number of vehicles they built by 50%. They built more than 1.8 million in 2023. Had they maintained that 50% CAGR, they would have been on track to build 2.5 million in 2024. But they're saying the opposite. They're not giving us formal guidance. They've omitted that from the volume, the graph in the deck titled volume. But what they're saying is that while they're ramping up their first gen models, Y and 3, they also have imminent plans to bring on this next gen model that we have few details about, which will be built in Texas. And for that reason, they're guiding us to substantially lower growth. But that growth, again, it is on a compound basis and it's based on production, not delivery. But you can extrapolate out, right? And if they build less cars, they have fewer to deliver to customers.
Just to play devil's advocate here, they're talking about like production and costs and all that. Production costs actually went down 3.2%. So I think right now the base model to create it, it's costing them about $36K. We're seeing it drop. It might relate to the fact that lithium as a commodity is actually dropping as well. So like, I don't think the crazy media narrative of being absurdly bearish is fully accurate right now. I don't think that's completely fair, but I also don't think this idea of like, oh, I'm just going to catch the falling knife whenever Tesla dips, like I should buy it. Like, I think the truth is somewhere in the middle. I'm looking to buy the dip. I'm not going to catch the falling knife. I'm going to wait to see how things play out, because obviously Tesla clearly is an interest rate sensitive company. Just to put this in a bit of perspective, because I think there's going to be a lot of doomsday in the short term, I just want to remind everyone that Tesla, company TSLA, let's get some actual facts right here. It had $15 billion in net income in 2023. That's absolutely crazy. Right here, the Model Y became the best-selling vehicle in the world. Also kind of crazy. And then they also have $29.1 billion in cash. $29.1 billion in cash, $15 billion in net income, and their vehicle, the Model Y, the best-selling vehicle in the entire world. So just a little bit there of like, if you're an active trader, hey, play the current trend. But for someone who's an investor, I think it's kind of important sometimes to take a step back and understand the big picture. And then also, final thing, just for those of you interested in the world of crypto, Tesla's Bitcoin holdings remained unchanged in Q4. So they are continuing to diamond hand their old digital gold, the old BTC holdings. So that's what's going on with Tesla and specifically Bitcoin. So as I alluded to before, I want to know, you buying here, you waiting? For me, I don't think my long-term projection on Tesla has really changed at all. And if anything, I'm going to be patient, take a step back, and kind of wait for that sniper-esque opportunity to get some more shares.